Hello and welcome. You're watching the F&O Show on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza.
Good morning. I'm Agam Vakil, and here are the top headlines for this hour. Well, it's a strong start for Indian benchmark indices, which opens above the mark of 10,450. India VIX trades higher. And open interest increases in Ujjivan Financial as well as Ramco Cements as traders take fresh positions in their respective futures. And Bharti Airtel gains more than 2% in early trade after a block deal. And Hindalco is expected to post a good set of numbers when it comes out with the second quarter earnings today. But input costs could dent margins going forward.
All right, let's take a look as to what's happening in the futures and options market. Well, it looks like a day of consolidation once again. Remember, this week, Nifty and Bank Nifty both scaled to all-time high levels. What we're seeing today is a little bit of profit booking. Nifty trading with cuts of almost 8 points. And you've got the India VIX, actually, which has surged in today's session. But still, the Nifty futures are trading with a premium of almost 20 points at the moment. The premium seems to have come down compared to yesterday's closing. But remember, the base for the market is now shifting higher. Still, if you look at the range, it's between 10,000 to about 10,500. That's where the maximum open interest concentration is. And specifically in today's trade, if you go by the options data, we've seen some bit of open interest addition coming for the 10,400 call as well as the put strike. Both these strikes have seen addition of almost 1 lakh shares. So what is that telling you? There could be some bit of consolidation which could come in at about these levels. Let's also look at Bank Nifty then. If you go by the most active strikes in Bank Nifty, 25,700 call and 26,000 call are these two other strikes which are the most active. And the Bank Nifty futures are currently trading with almost 13-point premium, and that premium seems to have come lower. Remember, there was that surge in terms of open interest of 21% 2 days back, but in the last two trading sessions, some bit of unwinding has come in for the Bank Nifty futures as well. What's happening with the institutions? Well, clearly in the last two sessions, we've seen the FIs buying into the cash segment, but remember, their net long positions on the index futures, they've been coming down. If you compare it from the start of the series, they were net long 70%. That percentage has now come down to about 65%. And clients which hold almost 50% of the overall open interest in the futures and options segment yesterday saw a bit of unwinding coming when it comes to option strike, Agam.
Right, and in terms of the changes in open interest and stock futures specifically, Navneet, again, it's become very earnings specific, and it's driven a lot on account of some of these stocks. Let's take a look at Ujjivan Financial and the Ramco Cements, which are at the top of the list. Page Industries has taken over, it seems, in the last 10 minutes, where we've seen a surge of nearly 13% in OI, and the stock itself has jumped by as much as 3.5%. So we'll be watching out for that fresh longs building there. Power Grid, ICICI Prudential, and Idea Cellular all on that list of surge in OI. Let's also take a look at some of these counters which are looking at unwinding. Berger Paints, of course, came out with its earnings, and it is looking like a weak set because it's down 3%. Unwinding seen, so longs are unwinding in Berger Paints. Dalmia Bharat, Ashok Leyland, Cummins India, and IDBI Bank, among the others. But in this list, it's Berger Paints that stands out with longs unwinding Navneet.
All right. Agam was talking about Ujjivan Financial. The counter has been in focus on back of its September quarter earnings, which were pretty much in line with what the street was estimating. But the company's asset quality has improved sequentially, so that's one good news. To discuss the quarter gone by, joining us now is Sudha Suresh, MD and CEO of the company. And we're also joined by Shraddha Babla from our research team, who tracks this space pretty closely. Over to you, Shraddha.
Thank you, Ms. Sudha, for joining us on Bloomberg Quint. Just wanted to understand what has caused the sequential improvement in the gross NPA number, and what is it likely to look like by the end of March 18?
I think a lot of efforts have been taken by the credit collection team in order to improve the situation, which has been caused predominantly because of the demonetization. Overall, in the last 6 months, I think we have a credit collection team which has put massive efforts with a planned credit program for looking at the overdue collections, and that has also been split into buckets so that we have focused on the buckets which are greater than 90 days. Overall, I think the collection team have put up a good performance, whereby we have seen on the way they are on a complete turnaround. We looked at assets which predominantly could be loss assets, and then we made a significant provision for that in the first quarter, which is almost about 159 crores. Further, we looked at those of them were provided and we didn't have any recoveries in Q2. We also did a prudential write-off of that of about 88 crores. So overall, I think what we are looking at is that the credit costs have halved in this quarter, and overall the performance is such that the PAR has reduced from 8.8% to 6.7%. Not only that, in terms of a fresh disbursement from January to September, that continues to show a very impressive collection efficiency of 99.7%, which is more or less the same, in the microfinance sector, on normal mode.
If you could also tell us how the recovery trends have been in the two important states of Karnataka and Maharashtra, and if you've started disbursements again there?
So we have, pockets where in Karnataka and Maharashtra where we are largely unaffected and where the business is good and the branches, PAR are minimal or normal, and there we continue to do our business. Wherever the branches in Maharashtra and Karnataka are affected, we are looking at the position on a branch-by-branch, case, and we are accordingly extending our credit. Beyond that, we are also focused on the OD collections in these branches, which has been showing good traction, and hopefully we will see, the PAR tapering off in these states also.
Okay, when do you think Ujjivan can get back to reporting a positive quarterly profit number?
So we do hope and look for the Q3 being on a standalone, definitely a profitable quarter.
And if you could talk about your branch rollout plans and the kind of deposit base that you target to accumulate by the end of the current financial year?
The branch rollout plan is as per our strategy, where we have looked at rolling out totally about 160 branches and converting them as bank branches basically. We have already 100 on the milestone, achieved by October, and we will complete the rest within the next 2 quarters, maybe, even early fourth quarter, we would have completed the whole branch rollout. Similarly, the other set of branches will be rolled out in the next fiscal year. And we have maintained our progress as per our plan in our transformation in terms of the branch rollout strategy. On the deposit side, I think we have now touched about 1,349 crores. On the deposit base, and we have also, done impressively in terms of diversifying our funding sources, whereby we have raised certificate of deposits post the scheduled bank status. So I think overall we are seeing fairly good response and liquidity, both in terms of the institutional deposits as well as the retail liability build-up should happen, fairly well in the next 2 quarters.
All right, appreciate you joining us and speaking with us at Bloomberg Quint. So it's quite a bit of sequential improvement coming in for Ujjivan Financial Services. Net profit expected in the 3rd quarter is what the management has to say. Back to you guys.
Thanks for that, Shraddha. And clearly that's visible in the stock price today, which has seen some bit of positive tick. Even on the future side, it has seen some fresh long positions coming about as the open interest has surged for November Ujjivan Financial Futures. That's there on your screen. It's up almost 10%. Well, on that note, before we get our guest on the show, here's a reminder. If you have any queries regarding the futures and options market, you can call us now on 022-4540-4141. You can also write to us on Twitter, Facebook with AskPQ hashtag. Let's welcome our F&O experts for the day then. Rahul Shah of Equity Advisory Group and Navneet Daga of IIFL Wealth joins us on the show now. Good morning to both of you gentlemen, and appreciate you joining us today on Bloomberg Quint Live. Rahul, let me come to you. Markets at these elevated levels, would you recommend taking any sort of trade, or one should just stay away and hold on, because it looks like there could be a bit of consolidation now?
Morning. I think the markets have been, we are at fresh lifetime high, and whenever when we see such kind of a scenario, we see the markets going much more, inching much more higher. And if you, just for instance, if we take last month when we saw the markets again back to all-time high, we saw BankX underperforming, and again this month series we've seen BankX again back to the radar. So I feel that the markets can still go higher from here. So maybe my target is at around 10,600 or so odd levels. Nifty can still go from the current levels to another 150 points or odd from here. So I think I would still go long, and the best way to play is buying a call option of 10,500.
Navneet, good morning to you. How about you? How are you viewing the trade on the benchmark indices from here on?
Well, hi, good morning. Look, there's a sense if you look at the data carefully last couple of days, we have seen some kind of an long unwinding happening at index futures level from the FIS side, and today morning we have seen some kind of a call writing happening on the higher side at 10,500, 10,400 levels. So my view is like quite constructive overall in the market, whereby I believe still the index level we might see a gradual up move with the consolidation happening. But the larger bigger trade is to my understanding would be on the bank nifty. The last time we discussed that 25,200 would be a very critical level for the bank nifty, and since that level has been surpassed and been holding up very well, so I would rather than chasing bank nifty index rather than being taking nifty index. One can initiate a covered call strategy on bank nifty, whereby going long on the futures at the current market price and selling in November 9th weekly expiry 25,700 call options on the higher side just to reduce the cost of it. I'll place a stop loss on the lower side at 25,250 on the lower side and expect the bank nifty to move towards 25,700 on the higher side.
All right, we'll get you those strategies in details, but we'll talk about the options corner now. And Navneet Daga has a bull call spread on Bharti Airtel. But before we take a look at his strategy, let's see what it exactly means. A bull call spread is employed when one expects a moderate up move in a security. In this strategy, a call option of a certain strike is purchased and a call option of a higher strike is simultaneously sold. Navneet, over to you. A strategy on Bharti Airtel, a counter which has been very active post its earnings.
Look, this is a stock which is almost coming out of almost 7 to 8 years of underperformance and just started to move up on the higher side. So I understand that this counter has been a bit of an overstretch, overbought at this point of time. So it's better to trade off with the kind of bull call spreads whereby the risk is a bit limited. And buying in strike 560 call option and selling at 600 call options would have a net payoff of almost 12 points. And I expect that the stock might have a gradual up move from here on, and at the end of a month, somewhere near to 600 would be the stock price target. So we can expect the spreads moving towards which we are initiating at 12 points. One can see the spreads actually moving towards levels of 25 to 30 levels if the stock price moves towards 600 levels. And I place a stop loss on the net spread of almost 5 points. So a gradual up move with a long bias on Bharti Airtel.
Rahul, you're also buying the Nifty and the Bank Nifty calls at this point in time. Can you take us through those?
I think interestingly what we see is that BankX, there was a crucial levels. I think what we've been observing is that three attempts that Bank Nifty made it to cross about 25,000 and to come back to 24 odd level again. So this is the first time after crossing 25,000 convincingly, and we have crossed the technical breach of 25,200. So I think that's given a fresh breakout. So I think unless it breaks 25,200 again, so I would always play a long side. So I think the best way to play on a longer side at a higher levels in indices is through options. So I think 26,000 call options of Bank Nifty of the last expiry, that's 30th November, I would go long with a stop loss. It's quoting around 158, keep a stop loss of 120 or something, target of 220.
So, all right, both our guests today are pretty bullish on Bank Nifty. Let's also look at a couple of active stock futures then, which are making big moves in terms of price action or open interest. Let's just pull up InfiBeam. This is the counter which was up almost 20% yesterday, and today once again it has touched its fresh 52-week high. InfiBeam underlying trading with gains of 7%, not much of an addition seen on the future side, up only close to 2 to 3%. Navneet, at these levels on InfiBeam, would you recommend taking any fresh trade? Or let's say if somebody was holding a long here, what should they do?
To our understanding, if somebody is holding on the longs, one can carry the longs and just keep trailing a stop loss on the higher side, because the stocks which are making the fresh life highs or 52-week high are likely that they might continue to have a momentum on the higher side. Now the stop loss should be levels of 155 on that stock. and somebody is looking to enter into the trade, the stop losses would be quite deep, since 155 would be the levels. So I would be, rather than somebody is looking to initiate a position, one can be long on the call options rather than being on the futures itself. 180 call options are quite active, and I would say that one can initiate a long on that directly and keep a stop loss on the lower side of 4 rupees on that.
Rahul, I want to come to you on some of the earnings that we're expecting today. Now, I know that is more fundamental in nature, but Titan company hasn't seen too much, at least in terms of movements or open interest. Can you give us your view as to how Titan may develop? It's currently trading at 666. Its futures, by that I mean, and its open interest is up as much as nearly 4%. If someone were to take a call on Titan, can you tell us about what we can do with it?
I think way Titan has moved up, again it's at fresh lifetime high, and way the stock we have seen also in last couple of days, the fresh longs built up also in the stock. So technically also stock is in the new trading zone, and longs added in the futures. So I feel that near term, I think the stock can still go further, inch up higher with 3-4% more from here, so maybe around 700 odd so levels it can go to from the current levels, and one should look at that stop loss if they are buying it. I think we should look at from the range of 628 or so, because that's the area where it was consolidating bit earlier, 600 and then 630. So I think that should be the stop loss one should keep for if you want to build up a fresh position.
All right, that's the view coming in on Titan. The company will be declaring its September quarter earnings, but this is a stock which has had a great run. In fact, it is trading at its all-time high levels. Yesterday in the second half also you saw the stock moving nearly 3%. Let's see how the numbers pan out. But clearly, if you go by the 52-week low, which was registered post demonetization, the stock touched lows of 296 on 21st of November. And look at that, the stock's more than doubled from those levels. It's time for us on the show to address a couple of the viewer queries, and we're getting some live queries. We've got Keshav Rana, who's joined us on Facebook. He's asking what's the view on Hero MotoCorp. He's holding November call option of a strike 3850. He wants to know what should he do. I believe Hero MotoCorp has seen a bit of correction the last few days. Yesterday the October sales number came about and the street was not clearly too enthused with those numbers. Navneet, what do you think Keshav should do? He's holding November call option strike of 3850. He's not said what was the premium where he entered at though.
Well, to my understanding, that overall trend in the stock has been weak, and it's been gradual underperformer in this entire auto pack. And to our understanding, some of the levels of 3700 has been a very crucial level. So since it's November is a long month, expiry month, I would say that until the stock is hovering on the futures levels, it's hovering over 3700 levels. One can still wait and take a chance of any up move. But however, one should be very strictly and quite vigilant about keeping a stop loss if the November stock futures started to trade below 3700 range. That's where the breakdown would be confirmed on the lower side. So I'll ask the gentleman to keep a strict watch on 3700 levels on the November futures.
Okay, we have another query on YouTube, and this one comes from Manohar Gupta, and he wants to get an idea on what to do with Airtel. And currently it's trading at 555, but if you consider its futures, we're looking at another 2% uptick in OI. Its futures, November futures at 557 now. The stock itself is moving up 2%. Rahul, what can Manohar do with Bharti Airtel now? Okay, I think we have an audio issue with Rahul, but Navneet, can I take you? Can you take you up on this one? What can Manohar do with Bharti Airtel?
Look, we just discussed that Bharti Airtel I'm quite bullish on, and we initiated a bull call spread on that. So if the gentleman is already long, I'll say that he should hang on and trail your stop loss on the higher side, and my stop loss should be a 540 odd zone, and ride the momentum on the upside. I'm expecting the stock to zoom past somewhere near to 600 levels in this expiry itself. So better to just keep trailing stop loss higher and ride your profits on the higher side, and the momentum likely to propel the stocks towards somewhere near to 600 levels. And another way we have already explained that bull call spread could be the one way whereby the low risk strategy can work out for the stock.
Okay, Prujwal Ghosh has joined us on Facebook, and thanks Prujwal for writing to us. You seem to be one of our regular viewers. Prujwal has asked to get some view on Cholamandalam Finance, and he wants to take a positional call here is what I'm understanding. He wants a technical expert to advise him as to what could be the correct entry level if somebody wants to take a positional call here. Navneet, Cholamandalam Investment and Finance Company, what should be the right entry level if somebody wants to take a position, let's say, for the next 6 to 8 months?
Well, the stock has been quite over the mark on off-late trades. What we have seen is one big day on downtrend and then another block deal, and then stock moved higher. Now, the previous top was somewhere near to 1220 odd range, and that's where I believe that would be a good entry point for the stock. That stock looks to be that one might get an entry point near to that range of 1220 to 1230 range. That seems to be the better entry point for the stock for positional view. And looking that once it has crossed that double top, and there are chances that on the higher side it might keep on surprising, but the entry point to my understanding would be it's in the range of 1220 to 1230 range, and I expect that the positional side the stock has a potential to move as high as somewhere near to 1450 odd levels, the kind of a breakout that it has seen.
Okay, we have one more query coming in on YouTube. This one is from Nag Basav Punaiya, and he has bought a futures in Bharat Finance at 988, and I believe this is Bharat Financial Inclusion, if I'm not mistaken. It's currently trading at 990 now. Navneet, he's making around 2 points right now. He clearly wants to get long-term idea of what to do with the stock. How would you place your trades here?
Look, a lot of the news has already been digested in this after this Indus and Bharat Financial's news flow. To my understanding, now there would be an upward resistance on the higher side of 1020 odd range from where the stock is corrected after the near sell and use kind of an event. So to my understanding, there would be a limited upside potential, but however, I'm not looking at a major downside as well. So I would say the gentleman can try it and still expect the stock moving toward the upward band of 1020 odd range. That's where one should look to book profit. And however, on the downside, since the stock price, the current market price is near to his stock entry price, I would say that you should keep a very strict stop loss on the lower side of 980 odd range, and I expect that on an up move you might get an exit above 1000 odd levels.
All right, so that's the view coming in on Bharat Financial. We've also got a query from AB Trader on YouTube. He wants to know if our experts could suggest any F&O trades for a day or two. Well, Mr. AB Trader, we're just getting to that segment. We'll get you some trading strategies from our guest. Let's get you some trading strategies then for the day, or probably they could be for the next 3 to 4 days. Rahul, let me come to you. Your top trading strategies would be?
I think two stock ideas. One is from the private sector bank. I think we saw recently what was Axis Bank. So Axis Bank, I think is showing a lot of strength in it. We saw fresh longs added into the stock, and technically also it has given a breakout. So I would buy Axis Bank with a stop loss of 532 and target of 567. And second would be Jindal Steel and Power. Again, this stock, entire metal pack, we've seen a good run up, and most of them are given a good breakout. So in that comes to me on my top of my mind is JSPL. So stock again near to a 52 week high and a fresh long. So I think I would buy with one stop loss of 159 and target of 175.
Okay, and Navneet, you have a long call on Jain Irrigation November futures. Can you take us through those?
Look, Agam, this stock has been quite laggard, and it started to find its feet. And if you look out on the charts on daily as well as weekly chart, it has just broken out of its symmetric triangle breakout on the higher side, which gives it an upward projection of somewhere in the levels of 120 to 140 odd range. So I'm talking about a big positional trade. So to my understanding, in the last couple of days, I've seen some kind of a long open interest addition as well as a decent volume build up. So the number of combination of things are working out well for this stock, and I expect one can look for an entry in the range of 109 odd range with the current market price, I don't know, somewhere in the range of 109 to 110. It's a good decent entry point. One can place a stop loss at 104. and I expect the initial target of 120 to be met in this expiry, but my positional target on the upside is as high as somewhere into 140 to 145 range.
All right, so those were a couple of the trading strategies. On that note, we'd like to thank both our guests, Rahul as well as Navneet. Appreciate you guys joining us today and giving us your views in the futures and options market, and also helping our viewers with their queries. Well, let's move on. It's the earnings season, and Orient Cement reported a good quarter. Mr. D.D. Khetrapal, MD and CEO of Orient Cement, joins us on the show now. Mr. Khetrapal, good morning to you, and thank you very much for joining us today on Bloomberg Quint Live. And I want to congratulate you first. The numbers look pretty good optically. The operating performance has been pretty good. Your EBITDA has risen nearly 4.5 times, and you've been able to post a profit versus a loss which was seen in the corresponding quarter. Could you tell us what led to this operating performance? Is it a better mix of coal or pet coke that you guys are using?
Well, there are multiple factors that go in. One of the major factors this year has been the turnaround in terms of pricing in the market, in our major market, which is Maharashtra. So that's been a major gain. On top of that, our new plant, which we had commissioned less than 2 years ago, last year that plant was under stabilization, in the very early stages of stabilization, and that time the efficiencies that you get from the new plant are always suboptimal. As every quarter passes, last year also we've been benefiting from efficiencies from that plant, and because of that, despite the inflation in the fuel costs in the market, we managed to actually reduce our power and fuel costs over last year. So that's been of great help. Plus, we've also diversified in our markets. We've entered some markets where we're not selling much earlier. We also have, what should I say, in terms of benefiting from various other efficiencies of scale as the volumes move up. 11% growth in the total volumes gives us the operating leverage. That also helps us. So multiple factors, not just one in terms of power and fuel, market pricing, volumes, operating leverage, efficiency at Chittapur, lots of things.
Mr. Khetrapal, can you tell us a little more about the progress on the JP Associates acquisition?
Well, as far as progress on that is concerned, it is completely dependent today on the vendors fulfilling the conditions precedent to the deal, which includes some of the approvals from the joint venture partners and also the approvals from the Madhya Pradesh government. We believe they are in fairly advanced stage of getting those approvals. The indications from their side to us are that within this calendar year, they should be able to produce all the permissions and clearances which fulfill the CPs to the transaction. And immediately after they fulfill that, we are prepared to sort of close out the transaction. So actually right now the ball is in the court of the vendors, and we are awaiting confirmation from their side towards fulfillment of the CPs.
Specific timeline that has been given to you?
Well, as I said earlier, they are saying within this calendar year. That gives us another 2 months for them to fulfill the conditions.
Let's say if the deal goes through, how are you looking to fund this deal? What's going to be the mix of equity and debt here?
Well, from the beginning, whatever we said, we have exactly the same financial requirements. Total payments required are nearly 1,600 crores, including the debt that we'll inherit. Only thing that changes from the time we announced the transaction till now is that because the transaction has taken time to get fulfilled, in the meantime, our existing operations have been profitable. They've been generating internal accruals. So nearly, at that time, we were saying the total funding requirements will be 1,600 crores. And we had no internal accruals available at that time. By now, we've raised 200 crores from internal accruals. So obviously, the total raising of resources will go down from 16 to 1,400. And largely, I think we will be able to restrict the dilution of equity. From earlier, we were saying between 600 to 700 crores. Now it might be less than 500 crores. And in terms of borrowings, around 1,000 crores of additional loans, including the inherited loans from the current owners, they will come our way. So no major change in funding pattern beyond we taking advantage of the cash accruals in the meantime.
Okay. And let's talk about the second half then. According to you, how is that looking? What kind of volume are you looking to clock? And what's the kind of realization that you are targeting internally in the second half of the financial year?
Well, I'll first talk about the volumes. We've closed the first half of the year with total volumes of a little over 2.7 million tons. We are working towards total volume in this particular half that we are now into. 3.3 million would be our target for the second half, taking the total annual volumes towards 6 million tons, which will give us the capacity utilization of nearly 75% for the year as a whole. And in terms of profitability, we do believe that the second half should give us EBITDA in the region of 250 to 270 crores. If you do the arithmetic of that, we are saying nearly 3.3 million tons of volumes at around 800 rupees per ton of EBITDA, which was just in line with the EBITDA that we had in the Q1 of this year. So that's our plan for the second half. And hopefully, unless there's a major surprise or a shock from the market, we should be doing that.
Okay, Mr. Kedrapal, thanks for joining us and taking us through those details and the outlook for Orient Cement going forward. But we move on to another company which had released their earnings earlier. Eclerx had a relatively muted quarter, but marginally exceeded expectations, and an exceptional item aided the company's profit growth to as much as 11.5%. Joining us to discuss this quarter gone by is Rohitash Gupta, the CFO at Eclerx. Hi, Rohitash. Thanks for joining us. My first question will have to do with the expectations of the second quarter being weaker owing to a roll-off in one of your clients. But, it's turned out to be a much better quarter. Can you take us through your revenue growth and the factors that you attribute to your revenues for this particular quarter?
So you are right that this quarter was slightly better than what we were expecting, because one of the large clients which we have anticipated to roll off in Q1 indeed rolled off, and that created a loss of a lot of revenue. Despite that, we were able to achieve a decline of less than 1% quarter on quarter against the anticipation of 2 to 4% decline. So in that context, it's a slightly better output. On the margin fronts, however, I would say that margins further came down, and the excess of people that was created because of this large roll-off at the end of Q1 could not be fully redeployed, and our attritions also came down, which otherwise is a good sign, but that clubbed with the roll-off and excess people created a margin pressure this quarter. We think that both the revenue as well as operating margin situation will improve from Q2 levels onwards. In terms of highlights of the quarter, I would say 2 or 3 things. The first is that we have been growing in the right areas, because the new sales that are added in this quarter or even in H1 were in the areas that we are strategically focused on. Number 1, analytics. Number 2, digital. Number 3, onshore and consulting. So all these areas have shown tremendous growth in this H1 compared to last H1. And we anticipate that share of these services which we hope are much more sticky and less amenable to future roll-off risks, either due to automation or due to other threats, is relatively lesser. So I think the risk portfolio is definitely, risk of the portfolio is definitely getting better.
Okay, Rohitash, so there has been a ramp up of on-site and managed services business and deployment. Of course, there is an expectation on the street that could lead to some amount of weakness in margins. Can you take us through some of those factors as well?
Yeah, 2 or 3 facts around that. So the reason why we are wanting to grow in certain specified segments, be it onshore, be it consulting, be it tech services or analytics, is because we feel that these are at less risk compared to offshore FTE business. And we have seen the negative manifestations of that business in the last 3 client events also. So we feel that these new growth areas are sticky. However, in the margin terms, as you rightly said, some of these services are definitely lower percentage margin compared to offshore FTE business. And that's the nature of the beast. And what the hope is that some of these services also entail downstream BPO services, which will make up for the margin, at least in the margin pool sense, if not in the percentage sense. So we think that there will be tail end effect to this, our current strategy, where we will get closer to the customers and eventually will get even offshore BPO business also by virtue of it, which is more profitable.
And will the deployment of robotics across client segments also have a negative impact on margins, at least in the near term?
You're absolutely right. And in fact, I won't say near term. I would say that some of that impact is already baked in the numbers that you have seen in the last few quarters. And some more effect may come as the time goes by. So what happens with robotics is that you have to give the productivity benefits back to client, and robotics is a new technique of doing or achieving the same requirement. And it does create margin pressure because you lose your profitable people-driven business and deploy technology, which typically is more efficient in terms of cost to client and hence less profit.
And finally, Rohitash, from what we understand is that more than half of your deal pipeline involves digital deals. Can you tell us a little more about the deal pipeline as well?
I will make a slight correction. The deal pipeline as it stands at the end of Q2 is double than the corresponding number 12 months back. That's point number one. Point number two is that the current pipeline, which is roughly has a visibility of 3 to 6 months in future, almost close to half of it is actually from financial markets. And the remaining quarter, I would say, is from other two verticals, digital and customer operations.
All right, Rohitash, thanks for joining us and taking us through those quarterly numbers, as well as the outlook, of course. And, Navneet, from what we've heard, that there could be some margin pressures because of the kind of deployment they're bringing about in robotics. And Edelweiss is of the opinion that the rate at which eClerx is trading it at is largely factors in all the negatives and the positives, so it's fairly priced right now. We'll be watching out for eClerx services as well going in.
All right, looks like the Q2 was aided by that exceptional item. But on that note, it's a wrap on this edition of the F&O Show. Thanks a lot for watching it. But here's our new feature. Stay updated with the latest from the world of markets, policies and corporate news. Join Bloomberg Quint's WhatsApp group by sending a message on 491579 2393 850.
Of course, don't go anywhere. We have lots more lined up. Stay tuned in the Bloomberg Quint.